And we are back. Shout out to everybody here with the Fed meeting. Bitcoin 116,000. Let's see where this goes here. And I'm going to break it down for you right now. We're going to see what's happening in these charts. I got a trade open. Why not? You know, I'll trade the 4-hour time frame in this flag with this higher low. We should put in a higher high, higher low, retest off the top, and boom, 124,500. And never go back below the 200 moving average or the smooth moving average there. See, that's the 200 smooth and the 200 simple. The smooth is so beautiful. The SMMA, the 200 SMMA, the smooth, baby, the smooth. Keep it smooth. Shout out to everybody here. And the rate cut just came in. Let's take a look at the cut. Let's talk about it, and then they're going to have the meeting. Right now, there is way more liquidations above us than below us, suggesting we do go up on BOOKMAP. BOOKMAP suggesting it's a liquidity heat map and showing us that we're likely to go further to the upside here for BTC. All right, so that's what I'm seeing. I'm bullish right now on the call. Already up about 0.5%, but whatever, right? Not a big deal. We'll see where this goes. It's a pretty big trade. 7,000 at 10x leverage, $70,000 trade. So we'll see. We will see. Let's go and take a look here at the rate cut and talk about the information that we got. It was likely going to be one cut. Let's see what happened here as the news comes in. So it was one cut. They did cut the rate, though. They finally cut the rate. Can you believe it? But everybody knew they were going to cut the rate finally. But at least they're finally following, you know, they're in the order now, right? I mean, it's kind of like, and so let's take a look at it. The rate came in, and now we can look at the next one. Now, see, the thing is, this changes the possibility now for the next rate cut. So we didn't get the double cut as I speculated. We got one cut. All right, just one cut. But hey, we got it. Let's take a look at now what's going to happen here. So now there's a 74% chance that they're going to do another cut. All right, so it's almost guaranteed they will cut in October, which is very bullish. And then we skip the November meeting, and then a 68% chance we get the third cut. So it's looking very likely we will get 3 cuts. I think there should have been a double cut somewhere in there, personally, based on the probabilities. But hey, who am I? I'm just a guy. What do I know over here, right? So let's take a look at what I see happening to Bitcoin. Then we're going to watch Jerome Powell in a word salad, figure out what's happening. That conference comes at 2:30 every single time. Someone said it got moved to 2:30. It's always 2:30. That's why I usually don't come on till 2:15, but everyone else comes on at like 1:45 to actually do the meeting. The price action moves during his talk, not as much during the talk, but I have to go again. You know, so usually I don't like to sit here for 15 minutes waiting for him to talk, or actually a half an hour. So we had to sit here for 20 minutes now, but I'll entertain you somehow, some way. I don't know how, but I will. All right. Let's take a look at MyX. Is there some fun to be had in MyX small scalp? We talked about it bouncing off the top of the channel, and there was a chance. I mean, very unlikely it was going to pump from here. There was a bearish divergence on the 15. This was likely going to take you down. I would never have gotten in on that. Never. 21 away from the 200. A very strong bearish divergence. You can see it. When the RSI is swinging sharply down and price action swinging up, you know you're likely not going to continue to the upside. If you do, you don't understand the probabilities of trading. Okay? Yeah. That's it. Yeah. Shout out to everybody here at Crypto Lifer 33. I'd greatly appreciate it. So we didn't get the 50 basis point, right, cut that we thought could come. Just 25. Breaking revised lower from June. Media production shows 50 basis more rate cuts at 20. Yeah, exactly. We are going to get more rate cuts for sure. Very, very likely. So we went over that too right at the beginning. Exactly. 50 basis more of rate cuts this year, 100%. Powell will cut rates. Trillions will flow into crypto. Patience is key. Altcoins will explode. Look, and he's dancing for us right now. Let's go, Jerome. Let's go, baby. Jerome. Yeah. He's doing it. He's doing it. Come on, that's beautiful. That's absolutely beautiful. So a nothing burger. We're going to have to just look at the charts and see what the charts say. So we already know he's going to come out somewhat dovish. But what he says here, and will it even matter? You know what I mean? Oh, sorry. Oh, man. Sorry. Hold on. I got to bring that music down. Something's playing in the background. Oh, it's this. Yeah. Sorry. About to say. Yeah, there we go. That might get me COP'd. It's not a big deal, but it just, Ooh-wee. Shout out to everybody here on the live. All right, so let's take a look at if there's any altcoin worth trading today. I would stay off the alts, except for what already pumped today. I did a review on Linnea this morning. It's going to get a lot of liquidity. I could see Linnea hitting $3 billion. It could 10x from where it's at. It's a great project. A lot of people are going to get into that TVL. Linnea. So, Hollow World also on my radar. I'd pay attention to Hollow World. Boundless also on the radar here. Boundless, ZKC. And remember that Bio Protocol. It looks like Bio may be ready for its next leg to the upside. We caught it on that first leg. We haven't looked at it in a couple weeks for trading. It's retracing, right? Let's take a look here. Yeah, it looks like it kind of bounced on some compliant, it bounced. It found a nice level off that 786. You can see it kind of conceptualizing a move here. Bio Protocol. I wouldn't be surprised if this thing starts to go on a moon mission. Let's take a look at the daily. Daily still, where are you? Close enough to the 21. 4 hours got very tight price action. This thing looks mean. And if Bitcoin can go sideways tonight and not do anything too crazy, it looks like Bio may be getting the breakout. I'd pay attention to Bio Protocol. I don't own any. I'm not pumping my own bags. It does nothing for me if you trade Bio Protocol. All it does is it does something for me because you'll say, wow, this guy's good at what he does. I'd probably like to join his trading group, or I'd like to learn from him. I teach class the last Saturday of every month. It's coming up right there, as you can see. So hit the QR code to find out more. I teach class the last Saturday of every month. It's right there for you to see. Hit that QR code to jump on in today. It's the least expensive you can get technical analysis training, I truly believe, anywhere in the world. Everyone else is gouging you for your curiosity. I'm going to reward you for it. And there's a big difference. God bless everybody here on the live. Thank you for jumping on in. And I'm going to reward you for your curiosity. Like, you want to step into the realm and learn something new? I'm going to make sure it doesn't break your bank. Everyone else is going to make you pay so much just to find out if it's worth it. What is that all about? You know what I mean? You know why? Because they know they have you by curiosity, so they can overcharge you because you're not sure. People that use monetary value to come up on people that aren't sure. And you could do it subtly. It's not breaking the law. Nobody knows it but you. But I'm telling you right now, God watches all your business. And just like you treat people, God watches how you treat business. And there's a way to treat people. There's a way to do it in which God approves, in a way that God does not. And you know it in your heart what it is. Everyone says that God does not exist, but then they say evil does. Evil cannot exist without good. Good cannot exist without evil. If you believe evil exists, then you know God does. The only reason you know something's wrong is because God is a standard. You see what I'm saying? When you're like, yeah, I know that's wrong. Why do we even know the killing is wrong? Why do we know anything is wrong? Because there's a standard. We know God wouldn't do that. Like, we think about it. God is a creator. God wouldn't kill creation. We already know that, right? So anytime you hurt creation, I don't care if you hurt an insect outside. I mean, it's one thing to kill a bug that's on you. But if you, like, say you went outside right now, there was a lizard, and you just pulled the lizard apart for no reason. That's not cool. That's bad karma. I don't care how small the animal is or the being is, I like Bio Protocol here. It looks pretty interesting. And that's when you're completely evolved with your chi, So I give you a nice little altcoin here to keep you salivating here in the markets while we get ready for this Bitcoin move. And now Bitcoin dumping as well here, all the way back down to the bottom of the channel. And I just see sideways. I'm looking for sideways Bitcoin. So we got the Fed rate cut, and it was a nothing burger. We front-ran it already for the last 2 weeks. Now we're actually consolidating for our next big move. In my humble opinion, we didn't even need the rate cut. We just needed to pay attention to our TA. I'm looking for this for a week, basically about a week sideways price action. Look out for chop. And it says by Thursday of next week, on the 25th, the money will have been moved. It will start to flow into the market. And we can get our move up to a new all-time high for Bitcoin and start to conceptualize the bigger move out of the rising wedge to the upside. So far, so good for BTC. If you're just coming on in, we go to Forex Factory and we take a look at the rate cut, at the Fed's rate, the federal funds rate. And the federal funds rate is at 4.25. Previously, it was 4.5. They went down by a quarter of a basis point. You see what I'm saying? But it's saying we're going to 4, and we're saying to go to 3.75. We will go down to 3.75. Okay? There is news tomorrow as well. There's data coming at us. I believe there's data tomorrow. Unemployment claims tomorrow at 8:30. We'll have this. And honestly, with the Fed rate cut coming in, we didn't get a lot of liquidations today. We didn't get a lot of crazy action. Usually we do. Not today. It didn't happen today. We got just kind of sideways whatevers. We've been going up and down between 1,600 and 15 and 14.5, 116,000 and 14,005. We've just been kind of doing our thing. I'll tell you what I don't want to see is I don't want to see the 1 hour lose the 200 moving average. I don't want to see the 15-minute lose the 200 moving average. If those two things stay strong, we'll be okay. Right now, the 50-minute is actually losing it, but it's in chop. So for me, it's more about the 1 hour then. It can lose the 15 minutes close enough to indecision, you know. And so I'm looking for this to basically go sideways and break out. Maybe it goes a little tighter. You know, and we start to break out somewhere here by Monday, or maybe even Saturday or Sunday. This Sunday night, we could pump. Sunday night could be the beginning of the pump too. But it definitely says we're not pumping till somewhere after Sunday, some sideways price action. And could we see a dump? A little bit of bearish div right there. With this moving up, that moving down, can we hold support? Once we lose the point of control, we will drop to 110.8 or possibly to 113,000. What does BOOKMAP say is happening on the order book? Well, it says that we could go all the way right back down to that 112,750. There's orders there. But Big Red is above us at 116.9, 117,000. So it suggests that we go to Big Red. Wow, what a pounding for Bitcoin. It just went from 116 all the way back down to 115.2 in the heartbeat. In an absolute heartbeat. So insane. Now, as long as we keep above the 4-hour 200 moving average, it's okay. But dang. And now this trade's 72 on the 200 moving average. Look, it's bouncing off of it right there. So today showed to be a horrible day to trade. It was choppy back and forth price action. Maybe you could have scalped small time frames, but with the anticipation of what could be, it was kind of like, you know. You now need to hold the 1-hour 200 moving average. We just bounced directly off of it. Look at that. We just hit it immediately. That's so insane. We just discussed this. I just said I don't want to lose it. It's like right as I said it, they're like, oh, okay, we'll hit it for you. And then bring the price action right back up. Price action. Well, you bring the price action right back to the upside here. So remember, during the FOMC, we're going to have FOMC in the middle. We're going to have BOOKMAP on the left. I'm going to be down here on the bottom right. And then we're also going to have the 1-minute chart here running for Bitcoin. I also will make a live trade if possible, but right now just scalping. And I don't see the volume like we usually get. Love the fact that they just went and stop hunted that area, though. That's pretty awesome. So the volatility is building up. We're seeing crazy price action on the smaller time frames for sure. And I wouldn't be surprised if a bunch of people get liquidated today. It is what it is. Look at that. Bull flag broke out exactly like it was supposed to. And should we call that bottom? You'd still be in payday right now from my bottom call right there. If you remember correctly, I bought the tweezer bottom. I got stopped out on this wick. I got right back in. And then I rode this puppy to the upside, sold, rode this puppy to the upside, sold, rode this puppy to the upside, sold, rode that up. It's just nuts how much I took out of the price action last week. Again, this week's been a little quieter. It's going to get to the point where I can't bring up last week anymore. You know what I mean? But it's been good. It's been good. And the key is not to give it back. I'm not giving it back. I give a little back chasing today, but I'm not giving it all back. Not even close, actually. Very small. So the daily time frame, we're looking for it to go sideways, hold its position, and catch up to the 21 and make a blast of a move here. Bit of a cup to handle to an all-time high of $126,000 BTC. And then we can get out of this falling wedge, this rising wedge, and start to really do damage. Flip that upside down. Yeah, you're looking for that to break out. Remember, a falling wedge, once it breaks out, it's gone, right? That thing can do damage. But so we're looking for this to do this and dump. Right? We're looking for this to dump to the downside and go parabolic. So go against the probability, technically. You see? BTC. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here. Let me jump back into the chat. I want to pop out the chat and see what the chat is doing. Shout out to Sean. Shout out to my whole team. Ain't nobody got to give a toss because there ain't no influence talking about. Meanwhile, you could test it yourself and all is revealed. Sammy's high value coverage with no better place to be. Shout out to you, man. Well, you're high value, so that makes me high value, brother. So God bless you, brother. Guys, Bitcoin goes to 250K today. Isn't that amazing? Sniper trade, let's go. The lightsaber Kano versus Master Fran. You're funny. Enter the likes. God bless you, brother. Appreciate the work, lifer. God bless. Jesus loves you. Thank you, Joe Dramas, mate. And I love Jesus. May Jesus live in us all, man. What a cool guy Jesus was, man, when you think about it, right? What an awesome person to be cool to everybody, to spread light around the world. And no matter how much hate you receive, translate it into light, love, and happiness. Never give hate to hate. Let hate be the log of fire that produces your love. Let hate be the log in the fire that produces your love. Let hate produce love. You know, like they got those mushrooms, right? They could take nuclear waste and turn it in. They could like basically take a whole area and they can suck in the toxins and spit out beautiful bacteria. That's like me. I could take nastiness and turn it into beauty. I will never fight violence with violence. You know, I will protect my family and myself if needed from an absolute random occurrence. But I would never have planned out violence. It doesn't make any sense. It doesn't make any sense. I feel bad for anyone, you know, that young kid. If that's, you know, if the story is how it's been told, I mean, he risked his whole life to do that. He had his whole life ahead of him. He was 27 years old, man. He had days he could go walking. There was sailing. He could go sailing. You know how many days I've been sailing in the beautiful ocean? You know how many days I played with my kids in the sand? Thank God I didn't ruin my life at 27. I've had so many beautiful days with my kids in my 40s already. You know? You know, I'm going to do something that no one has done. I'm going to pray for that kid. Pray for Tyler and his soul, man. Dear Lord, maybe please pray for Tyler. Whatever got him to do what he thought, however he got mixed up, whether he was the patsy, whether it was someone else that took the thing and I think he thought he was doing it. I think they gave him a blank. He thought he was doing it, but someone else really did it. That's my thought. My thought is he did it. He thinks he did it. But he didn't, because they didn't trust him to pull it off, right? They knew he wouldn't pull it off. They knew he could get shaky. They knew he was weak. So they put him in position, and somehow at the last minute, they switched the blank on him. I don't know how they did it. So he's sitting there lining up, but someone somewhere else took the shot. You know what I mean? Jumped on that plane that had no radar and skipped out to some other country. That's what I believe happened. I could be wrong, but I'm telling you, that's what I believe happened. 100%. He's 22, not 27. Even younger, really? Maybe you're right. Wow, even younger though? I don't know. Let's verify that. You're probably right though. I don't know where I got 27. Yeah, 22 years old, man. Dang, you're right. Even younger. So he's like not even got his head on right. When I was 22, I didn't know a damn thing, man. I guarantee if I had done something at 22, I would have looked back at 40 and regretted it. And so he's going to look back on his life and be like, how did he get caught up in this nonsense through a Discord, through his emotions? That's just like wrecking your entire account over emotion. See, us traders, we don't do things based on emotion. We've been training the brain. That's why when we see all these people screaming and yelling and voting over emotions and wilding out, it doesn't make sense to us as traders because we all know we'd be wrecked. We would lose our entire portfolio if we acted like that. If we all did what he did, right? Yeah. Sam, that was the plot of the movie with Mark Wahlberg. I know, right? I know nothing but the fact of my own ignorance, but I am going to pray for him because that's how big my heart is. God, please, if he does come to you through execution and he begs for forgiveness, I don't know how it works up there, but I pray for his soul. I pray for his soul, man. A young kid got lost in the mix, man, and got caught up in some sauce, man. You know? I don't know why I have compassion right now. I just, he ruined his life, man. He ruined his life. Oh, no, he's definitely getting the death penalty, for sure. That's going to happen. Yeah. Someone says, yeah, there's no way a guy grew up humming his whole life with his friends and family, whatever. I mean, maybe he could have, though. I haven't been that much. Honestly, I think I could have made that shot. And I've only been to a shooting range like 20 times in my life. I've hit some really close range shots. With the right scope and the good breathing, you know what I mean? But again, it is what it is. So, 15792 here for Fed. And let's hear Jerome Powell. He's about to come in 6 minutes. Someone said my 5-year-old could make that. Yeah. Yeah, there's mixed signals on that depending on how much you've understood weaponry, right? Yeah. 20-year-old not the same as when you were, yeah. The narrative is to divide us all. See, I figured it out. It hit me yesterday. I said, what is going on? I said, they want us to fight beyond belief. They want to destroy America. Someone on the outside is doing this to us. But I believe we're smarter. I believe Americans are smarter. Like, I won't hate my fellow American for any reason. I'll just look at them as someone confused, and I'll pray that they find the truth over time. You know? Can you put heart in the 1 minute? Can you put heart on the 1 minute? I don't know what that means. There's no way his knees were bending if he had something in his knee. You know. Already evidence there's a bunch of stuff out there. They just want to divide us all, man. Remember that. They just want to divide us all. That's all. That's all they want to do. Look at this craziness they've been doing here all day. A good day just to leave the market alone. I'll do my market update tonight, and then we'll see what goes on. But you never feel forced, especially on Fed Day. Yeah. The Russell 2K looks amazing. Hey, we need this bounce right here for Bitcoin. Get back above the 1 minute 200, and we can get a punch. It's a little hidden bullish technically. It's swinging down while that swings up on the 1 minute time frame. Anything but the vows from getting really, yeah, exactly. He says, why are your candle colors switched? Yeah, I don't know. I have no idea what you're talking about. Yao, hey, I like how speed reader lifer, amen. Yeah. Thank you, brother. What is your chart upside down? Because you got to do it upside down, man. That's how we do it here. All right? That's how we do it here. To mess with you. To mess with your brain. You know what I mean? So you can kind of see what might be happening against the grain here. See that? I am the king of flipping the chart upside down. You're going to see that happen a lot here on the channel. All right? Understand that. Chart flipping. See, like, it's annoying. Everyone should come on right now. But everyone comes on early, forcing me to come on early. Even though I only want to come on when he talks. Because that's when the market starts to move, not when the rate cut comes out. But, you know, what are you going to do? The algo is the algo. So we do what we do, right? How many beautiful people we have here on the live. Shout out to the 1,090 people here on the live stream. Thank you for jumping on in and appreciate you all for being here. All right. Invert the chart for better analysis, 100%. Inverted chart equals color change. Exactly. He's like, why are your colors switched, right? Because a red was a green and a green. Because I didn't understand what the heck he was saying. I was like, wait, what? You know, we're looking for this bounce, man. That's what we're looking for. We're looking for this flag. And if we can get it, I'm long, you know, and so I'm long. Stop loss below the 1 hour 200 moving average. As long as we hold that 1 hour, I'm okay. If we lose it, I'll lose and I'll reassess and go for my next idea. 126,000 could be the target here. The measured move of this whole entire poll, really. Bang, bang, bang. London calling. Come on, Jerome. I know, right? Jerpa. Are you coming to the table, Jerpa? So, look, I'm going to pull this off here. Actually, I'm going to go to the BitGet chart. Ooh, hype looks good to me, like it's going to get tight and punch. Hype's been in its own little zone compared to the rest of the market. Hype don't care. There's my bot doing damage. My bot's in right now. He's playing FOMC. So the bot wants to get its hands dirty on FOMC, which is crazy to me. But hey, let the bot do its thing. If he wants to go, he can go. I looked at this on CoinEx, right? Bang. Be impeccable with your word. Don't take anything personal. Don't make assumptions and always do your best. God bless you, Sam. Zeta, please. Shout out to Anthony Chamberlain. God bless you, Anthony. Thank you for being here. Right? Come on, Jerry. He better have an apology ready. Germ. Why? He's not late, man. He comes in at 2:30. Why? Everyone thinks he's late. He's not. Why does he need an apology? He's not late. He does this meeting every time at 2:30. So one thing, I'll stand by Jerome. He comes on time. This is it right here. This is what we're. This is the plan. And we pump to $124,000 Bitcoin by Monday. Shout out to Weeks. Yesterday I deposited $200 to my Arbitrum deposit address instead of my BNB, and Weeks support gave me my $200 back pretty quick. Look at that. He deposited $200 to Arbitrum deposit address instead of his BNB, and Weak Support gave him his $200 back pretty quick. I mean, that's awesome. I've heard that. I had never heard of that. Usually like, oh, sorry, you sent it to the wrong address. We don't have time to fix that. They take care of my lifers, man. Shout out to Ace Supersonic. Unless you do something really crazy, like run a bunch of margin trades and not have the money for it, and then when the market rips, not able to close the trade. It's crazy. Nothing like a lifer afternoon get-together. Shout out to Rave Song Records in the house. God bless you, brother. It's getting close. We're about to see Jer Powell, and then I can stop talking for once, right? Which is going to be pretty cool, right? So I'm going to move this over to like the 15, maybe even to the 5. And we know we're watching this key level here. And I'm going to shrink this down. Here he is, baby. Here he is. Hold on one second. Hold on one second. They're about to have they're just kind of going over something right now. I put it somewhere. Where the heck did I just put it? What am I doing over here? There it is. Here we go.
Tangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks
like a head and shoulder, right?
appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level.
Short-lived.
But
Short-lived, man.
it is also possible that the
Short-lived.
inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate.
Can't do that, though.
With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data,
Short-lived.
the evolving outlook,
Who says
and the
that?
balance of risks.
Who says short-lived?
In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy.
I have no idea. I have a better
The
idea
median
doing it than they
participant
do.
projects that the appropriate
What are
level
their
of federal
IQs? Who
funds
are
rate
these
will be
people?
3.6% at the end of this
Why
year.
do we listen to them? Like,
3.4% at the end of 2026, and 3.1% at the end of 2027.
wow.
This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty.
Subject to
And they're
change.
not a committee plan or decision. Policy is not on a preset course.
That looks like a bear move down.
The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored.
Well,
Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve.
but you've
our
never
maximum
cared about the
employment and
public. You're
price
not a
stability.
government agency. You're a private
you, and look
entity
forward to our
owned by a bunch of
discussion.
rich people that print our money to zero. I'm not stupid.
Great. Thank you. Chris Rugaber at Associated Press.
Chris.
As you know, Fed Governor Stephen Myron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly,
Yeah.
how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
Yeah.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
You and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation?
Someone said any hot ladies with question. You're funny, man.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase.
Someone
in
just said,
inflation
what
over
was the
course of
cut?
this
That's
year.
crazy. You're out to lunch, man.
Those are not very large effects at this point. And we do expect them to continue to build over the course of the rest of the year and into next year. And it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply.
Well,
to
AI
the
too.
point where we see,
You know what I mean? Have they
a curious balance.
have they brought an AI out of this? Some companies are firing people because they don't need them anymore. This is kind of interesting.
It's, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply.
I love Nick. He goes, Drip Powell. He always goes, Drip
Nick
Powell.
Timoroso, the Wall Street Journal. Chair Powell, do economic
Powell.
conditions and the balance of risks no longer warrant a restrictive policy setting?
This kid's funny.
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at
that
a
kid,
restrictive level, and people have different views, but a clearly restrictive level, I would say.
Drip Powell.
So, and we were able to do that over the course of
I
this
see
year
a dump
because the
comes
labor
down to
market was in
113,
very solid
114,
condition
like-
with strong job creation. and
People
all
thought
those
there would be a
things.
pump. We didn't get
I
it. Now
think
it'd be a dump.
If you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks, which
Someone
the
said,
risks
what
were
did they cut?
clear-
They cut baloney, kid, all right?
I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that.
They cut some
But
salami.
we do know that they've moved meaningfully.
What do you think they
toward
cut? The rate over here.
greater equality. The
What are you
risks
talking
moved
about,
to
huh?
Goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted?
We can't tell
And
you
how
that.
seriously was that option entertained at your meeting this week?
Ooh.
There wasn't widespread support at all for a 50 basis point.
Oh, come
cut
on.
today.
I wasn't there,
I
that's
think
why.
We've done very large rate hikes and very large rate
They
cuts
cut a
in the last 5 years.
They cut the
And you
cheese.
tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Colby Smooth.
Colby Smith with the New York Times.
know all these people.
Should we be viewing today's cut as the committee taking out some insurance
Colby.
against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we
God
need
bless you,
to
Lindsay. I feel the
remain
same.
fully
Thank
committed
you.
to restoring
I love that
2%
comment.
inflation on a sustained basis.
Powell was
and
the
we will
biggest
do that.
Jeet.
At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio.
Same
and
people every
television.
time. Michael McKee.
I'm
He can't stand him. He
a
always
little
looks at him like,
confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which
the dump ought to be
your
sending,
rate cuts wouldn't
as we said it would
address.
happen.
How do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that.
I got taken out on my bit
And we know
tonight.
that because the unemployment rate has ticked up. So, that's what I meant by that.
I can follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable?
I said that
Does
for
this
years.
present any credibility
I said that for
problems
years.
for
I said
you
they'll never hit
in
2%.
telling people that that's what you're going to do?
They
if
never
you can
hit 2%.
reach it?
I told you they never
Well, I
would.
mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to
This guy's so skeptical.
write down
He's like,
policy that you believe
like
will
this.
return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News.
oh, it's a new one. I don't see
The
her
latest
before.
inflation report shows that prices are still going up
Just a couple
across key
times.
categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and
Prices are going
you can
up.
see this consistently through the year.
Little
has
bull
been
div might
that
get a bounce,
inflation,
shoulder, head, right shoulder.
will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that though, right? We have to. Our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been
Shoulder,
slower
head
and
and shoulder
smaller.
there.
The labor market has softened, so the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to
God
the
bless
other
you, Alex.
mandate
Be in line,
have
baby.
grown, and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates, and we try to balance them. For a
You
long
bounce off
time,
114,
our framework
8
says
really
that
nicely.
when our two goals are intentional,
Could've been the
this
stop
is quite
hunt.
an unusual situation. How do
More
we
red
decide
above
what to
us.
do? Because
Says we're going
our
up.
tools can't do two things at once. What we do is we ask which is farther how far is each from the goal and how long is it expected to get to the goal. So, and then we think about those things and we see, as I mentioned, we have been.
He said
our
nothing, just so
policy
you
has
know.
been really skewed
The
toward
last 2
inflation
minutes, he
for a
said
long time,
absolutely
really.
nothing.
Now we see that
Nothing.
there's downside risk clearly. in
No,
the labor
analyze what he
market,
said.
and
He
so
said
we're
absolutely
moving in
nothing.
the direction of more neutral policy.
He said, we may be doing this,
Are
but
you
if it goes
about
that, we
the
may be
slowdown
doing
in the
that.
jobs
And
market for households at home, especially younger Americans struggling to land a job.
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market.
It's not going to be enough. It's too late. It's too little too late,
people who
man.
are sort of more at the margins. So
too little too late.
Kids coming out of college.
A lot of money's going to come
and
into the
younger
market to
people,
save those jobs.
minorities.
Should have started cutting
are-
rates way
are,
earlier.
having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into.
That's correct.
into
That's
higher
the one thing
unemployment.
he actually said, and that was correct.
Healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months.
That makes some sense.
And it's one of the reasons why we think it's appropriate that we begin to
Looking for this
shift our
inverted head and
policy
shoulder
focus,
possible to get us out of here, but it
toward a
looks more
balanced
bearish.
one.
Steve Leisman, CNBC. Mr.
Steve.
Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. You know what, let me say a word about the SEP really here. So we often point this out. What the SEP is, it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So
Man, we might go to 113 here. This is
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico.
Guido.
You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just, everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of
See how this looks like a head and
political
shoulder? Do you
outcomes.
see
I think
it?
when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that's just That is not at all the way we think about things at the Fed. We're taking a longer perspective.
Or
We're
we
trying
can
to
get the rib. It's
you know,
close
serve
here.
the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. You know, I would say we're doing our work exactly as we always have now.
We're battling the 1
And
minute
people
200 here.
They're making their arguments.
We got to get
and
back.
we're
We
having
got to
a
hold
really
that. We
great
lose
discussion
that.
around
It's going to be
these
a long
challenging
night.
issues.
A long
So-
night.
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
You know, I see it as a court case that it would be inappropriate for me to comment on.
What?
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. You know, how can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that, and it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. You know, we want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting
So far, the 1 hour,
responses for
200
that
moving
last
average
month,
is
for that
holding us
prior
down.
month, and you get to the place where
I've made some
the data are
legendary
much more
trades
reliable by
here.
the
We
second
could
and
get the
certainly
bounce.
third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. Shows a weaker job market coming into this year. If you had that information, would it have changed your mind related to where
if you had the
interest
wrong
rates should
information, but
be?
you made the rate, but now you're making the rate on the wrong information, how do you come out and say you're making the right decision now? He's got a beautiful point. I mean, it makes no sense.
Should there have been a cut earlier?
Makes no sense.
We have to live life looking through the windshield rather than the
Oh,
rearview mirror,
God.
as you know. And
So
all
he's
I
just
can
gonna
tell
make a
you is
joke?
We see where we are now, and we take appropriate action, and we took that appropriate action today.
Yo. So basically, this whole time, he's made
Thanks.
all these
Howard
meetings
Schneider
and all
with
these
Reuters.
decisions
So,
based off false data, and then says,
as
well,
you
now we got to
mentioned
do what we got to do
some argument
now.
that the job market
That's
would suggest
insane.
that the slide's already happening. A black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Yeah, like it's too small, too late,
Well,
dude.
I-
What are
I-
you
I didn't
thinking?
say that I
Like
thought
double
a quarter
cut?
point would make a huge difference to the
You should have
economy, but
double
you've gotta look
cut.
at the whole path of
Don't you
rates,
get it?
right? And the market's has already been baking in.
No, it hasn't.
Expectations. I mean,
It's baking in the false data you gave it because it wasn't right when you first did it. And you're affecting the market because you keep changing the rates on false data. So what do you say? Even this meeting is affected by your false meetings, man. So now you're way off.
Market works through expectations, right? So I think in addition
I'm
to
pissed.
just overall
This is craziness.
lower payroll job creation that shows you that at the margin,
Clownage.
the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that
Sure you do.
the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut.
It's
but
not going to
the
be
market's
enough
also
to
pricing
handle the
in a
rate, the
path.
labor
I'm
market.
not
Don't you get
blessing
it?
What the market's
You're going to have to
doing at all.
double
I'm just
cut and then
saying
triple
It's
cut.
not just one action.
You're behind, man.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I
Get
wouldn't say
out
that. I
of
mean,
the
you're right.
studio
Those
when
are
I'm
two-
live streaming,
we're-
please.
We're getting unusually large amounts of economic activity through the AI build out and corporate investment.
Sorry.
I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations.
get no respect
and that
over
may
here.
well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is it's moving along. Economic growth is going to be 1.5% or better this year, maybe a little better.
Could get this bounce on the
Forecasting
200 moving
coming
average
up,
on the
as you
1
can
minute,
see.
on the 1 hour and save the day here.
Labor
115K.
unemployment is low, but downside risks, but it's still a low unemployment rate. So that's how we see it.
Strong. The economy's strong. We'll get 2%.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
No, we're the best. Everything we do is great.
I, of course, am not going to comment on anything the Secretary says or really any other officer says.
Because we don't work for
So
the
in terms of
government. We work
reform
for
at the
ourselves.
Fed,
We don't answer to the
we
American
just-
people.
We just went through a lengthy and I think very successful
And the
process
Fed,
of updating
please.
our
And
monetary policy
the
framework.
Fed. It's a fake
I would say there's
organization
a lot of work going
that prints
on
our money
behind
to
the scenes
zero.
around
It's not a government
the assets
organization.
we have in the Federal Reserve Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the
All
Fed
the
at the
reserve
end of that
banks?
will be basically at the
So
same
shady.
level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're
Nice
certainly
bounce on the
open to
1 hour,
constructive
200 moving
criticism
average.
and ways
Could
to
keep
do our
us in
jobs
position
better.
here after they
Not an
sniped me,
independent
but
review.
I'm in the bigger one.
We're certainly open to to always trying to do better.
I mean, you have to say that. At least he said
Chairman,
that.
Neil Irwin with Axios. There's been some
Neil.
debate lately on whether AI is already starting to affect the labor market in terms of lower
That's
labor
what I
demand,
said. That's what
higher
I
productivity
said.
By contrast, do you buy that? And if that is true, does that have implications for the monetary policy setting?
100%.
So there's great uncertainty around that. I think
You can't make a decision on
my
that because now you're
view,
making a
which is
decision on
also
low
a bit of
labor,
a
but
guess,
labor,
but
it doesn't
widely
mean the
shared, I think,
economy's
is that
going
you are
down.
seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are
don't need
able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down, and so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality.
So the
So
200 moving
that
average
was
on the
not
1 hour
case during
kept
the
price.
pandemic, of course, goods inflation.
Taking a
went
bit of a
very
dump
high. We
here.
had essentially returned.
Could have saved
to
the night, honestly.
Zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, I mean, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Please bounce, bro. It's over. But it'll be the same thing with someone
Katarina
else.
Saraiva with Bloomberg News. I just wanted to follow up
Rena.
on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters, and that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your
He's not going to
response?
comment
What's your
on that.
message
He's
to
not
the
going to
public?
comment on that.
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Claire Jones, Financial Times. Given the range of views
Claire
expressed
Jones,
prior to
Financial
the meeting, I
Times.
think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide
Divergence.
a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint,
Nice bounce. That one
standpoint of what
that
we're
1 hour 200
trying to
moving
accomplish,
average, man,
it's
just
challenging
really
to
came
know
through.
what to do.
I love buying
There
those.
are, as I mentioned earlier, there are no risk-free
Look,
paths
legendary
now.
buys right here on the 200.
It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point, and that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% demand is still a low level. It's interesting. But, I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and, business investment. So we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot, big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy, that's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Well, I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition, and we've said that we would stop somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since
Matt's got these
2009
weird
during the
lists.
Great
What's up with your lists,
Recession.
man?
Delinquencies are high
Why'd you
for
wear
car
some?
loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have, a visible effect on that. But over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
Yeah, of course.
We're
what
tightly
happens.
focused on our goals.
It's exactly what happens.
And
That's why I'm here speculating
our goals
on
are
it.
maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And
Lizard
I
confirmed.
would say it's a mixed picture, but
Shout out to
households
Jay
are in
Dillon.
good shape, banks are in good shape. Overall, households are still in good shape in the aggregate, and I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities, and I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
I see a move to the upside here.
As you said, shorter-term inflation expectations have tended to respond to
1 hour,
near-term
200
inflation.
held us.
So if inflation goes up, inflation expectations will predict that it
Turn
takes just a
Jerome
little
Powell
while
up
to get
for
back
you
down.
there.
Fortunately, throughout this period, longer-term inflation expectations, both break even in the markets, and almost all of the longer-term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation.
Someone wrote reptilian mouth. You guys are crazy.
We actually assume that our actions have a real effect on that, and that we need to continually show and also
Totally
mention,
reptilian.
discuss our commitment to 2% inflation. And so you'll hear us doing that. But we're, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do.
Trying means you won't do it.
Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
All right, that's it, folks. That's all she wrote, boy. Let me get that music. All right, so the Fed meeting came in. Let's do our last analysis for you, kind of leave you with the afternoon. I'll do my top down like I always do. There is liquidity below us. They could go down and scoop us down to 113. There's liquidity above us. It is a little closer either way. It's telling us it could go either way, up to possibly 116.6 or back down to 114.3. We have indecision here for Bitcoin. On the smaller time frames, we are looking at this little flag. The 21 is touching right at the 200. It's technically by model just a little preemptive of it, and that does suggest we could get a break to the upside up to 117, 117, 116.869, back above this resistance. Bit of a shoulder, head, and a right shoulder here for Bitcoin. I'll be back tonight for the daily candle close. I'll update you. I don't think I'll go too crazy, though, in the markets. What I am looking for on the big picture is for the 4-hour to stay above the 200 moving average. For this to kind of, it's only hitting 1 right now, but maybe it comes back up and hits that top of that target, and we make ourselves some type of flag here. So I'm looking for a bounce. I'm looking for consolidation, and it looks like we'll go sideways until September 24th, and then we break out. So nothing has really changed. The Fed rate did not do anything to my initial updates and what I was looking at. I thought we'd get this crazy price action. We did not. We did not. You got a little bit of a dump, a little bit of a movement, but really nothing. It was the smallest, it was supposed to be the biggest Fed meeting in history, and it was the smallest movement we've ever seen. So there goes for anticipation. Remember, the witching is Friday. The witching is Friday, the quad witching. All right, we went over that this morning on the live stream. That's all the options expiring, stocks, futures, this Friday. It happens 4 times a year, the third Friday of December, I think September, right? And, the other days, the other third months out of the quarter. So, yeah, I'm still in a long right now, all right? I'm still in a long, and we'll see where we go. I am underwater, but very slightly right now, down 193. So we'll see where this goes. It's a 0.62, about a $80,000 trade. So we will see. Look, this is a bit of a cup and handle here, and we're looking to see if this 4-hour candle can get us to the upside. If we lose the 1-hour 200 moving average, I'll start to flip more bearish. We're going to come back down to 113. If we stay up here and go tight, and that's why this could be a beautiful entry here with a stop below. That could end up being a monster move to the upside. So anyway, I'll keep you guys updated throughout the day in the trading group. God bless you all. Thank you for being here. Let me put myself back so I'm back tomorrow where I need to be. I'm right about there, and then I'm a lot bigger. There we go. All right, everyone. Thank you so much for being here. Please comment, like, and subscribe. Hit the bell for notifications. You can find out when I post my next video. Remember, if you came to the channel, then you're already doing the right thing. Bitcoin getting a beautiful bounce off this 200 moving average on the 1 hour, and that's showing signs of a bullish move. And I showed you that 4-hour time frame and what I'm looking for on that price action. Everyone, I love you. I thank you so much, and I'll see you tomorrow. May God bless you all, and thank you for a beautiful live stream. I'll see you tomorrow. If you'd like to join my trading group, go to cryptolifer.com. 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 I'll see you there. Drop it.